The oil market is again under the spotlight as China inspires hopes. Stock investors are revising their portfolios. Let's discuss these issues in our evening market review. Wall Street aims to push market quotes up. Despite optimistic sentiment in the global markets, Wall Street had a volatile session on Monday and closed in the red. The major stock indexes gyrated in the early New York session and closed with moderate losses. The Dow Jones closed 0.2% down and the Nasdaq was 0.7% down. The S&P 500 shed 0.3% to close at 3,900 points. The indexes are trading slightly higher in the pre-market. The S&P 500 is expected to trade in the corridor between 3,870 and 3,960 points today. Wall Street completed the highly volatile session for the obvious reason. On a Friday, institutional investors revised their portfolios before the third quarter. The market commonly trades under high volatility at the end of a month, a quarter, and a half a year. Such dynamics will persist in the near future. Today, stocks of the market leaders such as Apple, Tesla, Microsoft, Alphabet, and Meta are trading cautiously higher. Stocks of the energy and the high-tech sectors showcase optimism. The provider of optimism is China, as Beijing is its zero-COVID policy, thus raising hopes for a revival of a global economic growth. China relaxed anti-COVID requirements for travelers. It's viewed as a landmark decision. On the top of that, Shanghai and Beijing reported zero new COVID cases on Monday. The economic calendar reminds us about the conference board consumer confidence index, which is due tonight. Besides, the market is alert to the ECB forum in Sintra, where central banks discuss their fight against inflation. The US dollar perked up today and regained 0.32%. Its index climbed to 104.35. The intraday corridor for today is defined between 104.10 and 104.60 points. The US currency owes its strength as a safe haven asset to recession fears and market turbulence. ECB President Christine Lagarde said at the summit today that the ECB is ready to speed up the pace of rate hikes if inflation accelerates faster. European stock indexes immediately jumped in response, but the single European currency went down. Lagarde said that the ECB plans cautious rate hikes, but it could tighten more aggressively in case inflation turns higher. The Canadian dollar is resisting fiercely its American rival. The USD CAD pair has been trading downward for the second day in a row. Today, the pair slipped below 1.2900, trading in the intraday corridor between 1.2810 and 1.2870. The loonie is flexing its muscles amid the rally in the oil market. Crude oil is trading higher because China removed some COVID restrictions. Oil prices also benefit from the news that G7 is searching the solution to push Russian oil prices down. G7 leaders aim to agree a ban on shipments for Russian oil sold above a particular pace. They invite the allies to join the deal. On the back of such news, Brent crude rose 1.49% to $116.75 a barrel. WTI added 1.29% to trade at $110.92 a barrel. Bitcoin is trading mainly sideways at around 21,000 inside a range of 800 points. Today it's trading with a slight bullish bias. Crypto investors are digesting positive and negative news. On a Monday, Goldman Sachs pushed the Coinbase stock down by 11%, downgrading its rating to the sell rank. On the plus side, the Bank of America said that the crypto winter did not dampen investors' investment in crypto assets. The bank said that blockchain technology and the ecosystem of digital assets would not trade away. At the same time, Three Arrow Capital, a crypto hedge fund, declared a default on its credit worth $650 million. Another interesting trend is that meme tokens are gaining ground. Whereas Bitcoin grew a bit more than 2% in 7 days and Ethereum rose 8%, Shiba Inu leaped more than 40% and Dogecoin jumped almost 30%. Sadly, today these tokens are losing momentum. By and large, the crypto market is consolidating and generating momentum. Bitcoin lacks energy to escape from the trading range between $20,800 and $21,200. Let me remind you about high volatility in the stock market ahead of the next quarter and a half a year. Tweet prudently with the InstaForex and see you tomorrow.